Hi there, welcome to kneppyinvests. In this video, I'm going to look at Betmakers, September quarter Appendix 4C. This company has been a fairly significant growth story on the ASX over the last few years. We have seen the valuation of this company get above $1 billion, and we have seen rapid growth in the receipts over that time period. Very excited to be talking about this company. I am a shareholder of Betmakers. I do have a small position, and I am thinking, or will be thinking about increasing my position, particularly if the company keeps hitting some goals. So let's get into the video and talk about what Betmakers actually do. Betmakers is a racing services technology company. Maybe they do a little bit more than just racing, but they do develop and provide software, data, and analytics products for the business-to-business wagering market. Betmakers was founded in 2009, and they listed in December 2015 via Top Better. So Top Better, and I do remember Top Better because they were had nothing to do with Betmakers, or not much. Anyway, Top Better acquired Dynamic Odds in mid-2018, then changed the name from Top Better to Betmakers, and then Betmakers sold the retail Top Better and Mad Broker for $6 million, and then acquired Global Betting Services, GBS, in July 2018. Betmakers had a very busy 2018. They changed their business model during that year, and that change has been significantly successful. So even though they did list on the ASX via Top Better in December 2015, it's really been only since 2018 when you could call this company Betmakers. The current CEO is Todd Buckingham. I'm not sure if he was the founder of Betmakers, but he's been in this company for quite a while. He has a 1.7% stake in the company, and the major shareholder is Ted Corp with a 10.3% stake. The market cap of Betmakers, been talking about them having a valuation of over $1 billion at times. At $1.06 is only $900 million, and the T code for this company could be anything else other than BET. Before we have a look at Betmakers Appendix 4C for the September quarter, I just want to go have a look at their financials for financial year 21 and compare it to financial year 20, just to see how the company has been growing. Now, something you have to be aware with Betmakers is they do make acquisitions, and that will influence the growth rate, but there is organic growth there. Revenue grew from 8.6 million to 19.5 million. Gross margins seem to be all over the place. I wouldn't be concerned for the fact that gross margins did fall from 74% to 52%. Company were or is operational cash flow negative, $500,000 in 2020, $2 million in 21, and unprofitable. So they are a loss-making company right now, $2.1 million loss in financial year 20 and a $17.5 million loss in 21. But they have $120 million of net cash. That is attractive to me, and one of the reasons I did become a shareholder, because that gives management a lot of flexibility in how they grow this company. More than likely, they won't do any share buybacks or dividends, and if they don't do those two things, then the best way to spend $120 million is maybe research and development or acquisitions. And more than likely, I think Betmakers will go down the acquisition route eventually, because they have done that in the past. And the price to sales ratio, 46.1, that does seem a little bit high, but that revenue, cash receipts have been growing at a significant rate. For instance, if they can double cash receipts in the financial year 22, price to sales ratio won't look quite as stretched. Before we have a look at Betmakers' most recent Appendix 4C for the financial year 22, the first quarter of the new financial year, let's go back 1 year ago and look at how this company was performing in the first quarter for financial year 2021. Receipts to customers, $3.9 million, and they were almost operational cash flow positive. In fact, they only operational cash flow negative by $55,000. In fact, in my opinion, you could just say this company was operational cash flow neutral this time 1 year ago. Had a fair bit of cash 1 year ago as well, $32.8 million. And the reason cash actually increased in this quarter, even though they were operational cash flow negative, is because there were some options exercised, and that put $1.6 million into their bank account. Now, because of acquisitions and because of organic growth, receipts from customers grew from over $3 million to $20.9 million, just short of $21 million. So receipts were up $17 million in the past year, so year on year. Now, you might think, well, receipts have grown significantly. That should mean the company is now operational cash flow positive, but they're not. They're still operational cash flow negative, and they're negative by a large amount, in fact, 1.5 million. So how did they increase their receipts by 17 million yet still operational cash flow negative? Well, it's all the costs. Product manufacturing and operating costs up 4.8 million. Staff costs up 9.4 million. Administration costs up $4.3 million. A lot of increase in costs. So even though receipts are growing, costs are growing at an even greater rate, or almost a greater rate. They also made spent $5.2 million on acquisitions and spent $6.6 million on property, plant, and expenditure, which is capital expenditure. Overall, the cash on hand in this business fell from $120.6 million to $108.8 million. So they did bleed a lot of cash in this quarter, even though they were only operational cash flow negative by $1.5 million. Although Betmakers have been around since 2015-16 as top bettor, I really have only been following Betmakers since the end of 2018, just after they made that transition from top bettor to Betmakers. And this is the receipts history going back to the December quarter 2018. We didn't see any significant growth in receipts from that December quarter 2018 to the June quarter 2020. Receipts grew from 1.8 million to 2.4 million. You probably could say and argue with me receipts were just going sideways. But ever since the start of COVID-19 financial panic or the pandemic, receipts have really grown at a significant rate. In fact, they've grown from 2.4 million to $21 million. A lot of that is through acquisitions, but there has been some organic growth as well. If you calculate the compound quarterly growth rate in receipts since December quarter 2018, we get a number of 25%. But if you just calculate for the last 4 quarters, we have seen receipts grow at 52% per quarter. The most important thing here is if they can continue growing their receipts organically without any acquisitions. And if they can do that, in my opinion, this company would have made it. The other thing is if they can control their costs and continue to increase their cash receipts, that would mean the company would be becoming more and more operational cash flow positive. Now, the market isn't concerned with that just yet. They just want to see receipts grow through time. They want to see this company think about the future, think about 5, 10 years down the future. But at some point in time, the management will have to think about becoming continually operational cash flow positive, because overall, the way we value companies is just the present value of all future positive cash flows. And if a company is never cash flow positive, then you can't value the company. In fact, the value of the company would be zero. So eventually the market will expect Betmakers to provide lots of cash flow into the business. That is an expectation for all these SaaS companies included, all these companies that are operational cash flow negative. At some point in the future, they have to prove to me in the market they can produce prodigious amounts of cash in their business. The question is, for all of us, whether they can do it. I think Betmakers definitely can do it. They have been operational cash flow positive in past quarters, and they aren't far off it right now. Although in the cash receipts history for Betmakers, I didn't really include the time they were top bettor. As I look at the chart here, going back to 2016, this does include a period of time when they were known as top bettor, not Betmakers. And it was during 2018 when they made that transition. And the market wasn't that fussed around Betmakers because during 2018, the share price fell. In fact, share price kept on falling during the first half of 2019. Wasn't towards the middle and later period of 2019, just before COVID-19, until we saw the breakout in Betmakers' share price. So the market was becoming a little bit more excited about this company prior to COVID-19, prior to where we saw receipts really take off for this company. So the market was expecting the growth in receipts for Betmakers. The market was forward-looking for this company. And although we did see share price fall a fair bit during COVID-19 financial panic, it fell from about 40 cents all the way back to about 8 cents. We saw a rapid recovery in the share price. And that recovery in the share price just kept on going all through 2020 and into the first half of 2021. In fact, share price went as high as about $1.65 towards May of this year. Share price, wouldn't say has been struggling since that high of $1.65, but I think it's just taken a breather because of that significant increase in share price over the subsequent or the previous few years. And share price is still in a weekly uptrend, well away from moving into a downtrend. And you just want to see the most recent bottom, which was about $1 a few weeks ago, about 2 months ago, not to be breached. So if the share price falls below $1, that would be a bad sign. And then the next low is around 85 cents. And we definitely don't want to see 85 cents breached, because that would mean the share price is potentially moving into a new weekly downtrend. Now let's have a look at the daily chart to see if there's anything exciting when we look at that chart. As we look at the daily chart for Betmakers, going back to September of 2020, share price was in a nice developed uptrend from that time all the way to May of this year. And then something happened. Not sure what happened towards the end of May, start of June. We did see a share price decrease from $1.55 all the way down to $1 in a few days of trading. So something negative happened at that point. And it did look quite ominous for shareholders, because we did see actually the share price move all the way down to around about 85 cents in the middle of July. But the share price has recovered, and we have seen the share price sort of go sideways since then. But there's no well-defined uptrend, no well-defined downtrend. It does look like the 200-day moving average has been a bit of support for the share price. We saw the share price fall through that for a few days back in July. The last 2 times we have seen the share price hit that 200-day moving average in October, and then a few days ago, share price has bounced off it, and that happened on the last day of trading for the most previous trading week, which would have been the 12th of November. So not really bullish in regards to Betmakers right now, just looking at this chart. Not really bearish. I would love it if the share price got above about $1.40 and then above $1.65 to beat the most recent high, or the all-time high for this company. But at this point in time, no reason to sell, no reason to buy. Fairly neutral in regards to share price action with Betmakers on the daily chart. That's all I have for this September quarter Appendix 4C video for Betmakers. I do prefer Betmakers over other companies like PointsBet, simply because they're into technology. They're not really into the betting side of things. And I do think this company has more chance of showing their competitive advantage over PointsBet and all those similar companies like that. So that's why I'm a little bit more excited about this company than some of those other betting companies that have been successful over the past few years. If you have any questions about this company or any other company on the ASX, please leave a comment, your thoughts, or a question in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.